Welcome Rafters to a second video about the Raft Trip Planner, which is a free Google spreadsheet. The first introductory video showed how to set up and how to use the planner for a typical 3 or 4 day raft trip. This video will focus on expense management and the use of deposits and expense subpools. The scenario for this video is an 8-day raft trip down the middle fork of the Salmon River with 21 rafters, 4 of which are children. So we're going to start on the expenses tab. And let's begin by noting that the planner keeps track of what share of the group expenses each rafter is responsible for. You'll see it in this column by rafter. It's based on the average expense per rafter. It also tracks each rafter's outlay, which is here, and is determined by the total of the expenses that this rafter has paid for and any deposits they might have used, which at this point in time, we haven't introduced them yet. So it can use these two things to calculate how much that the rafter either owes the group or is owed by the group. Okay. This approach simplifies and streamlines both the recording of expenses and the assignment of reimbursements at trip's end. And I point this out because this process doesn't change whether the individual expenses are made by the rafters or made by the CFO using deposits or group expenses that are being segregated into subpools. With that, let's start with deposits. They're generally used on longer and more expensive trips to assure commitment by the rafters and not to burden an individual rafter with paying for some large expenses well in advance of the trip. As you can see on the deposits tab, the deposits are disabled and transactions can't be added. So we're going to switch to the setup tab and enable deposits. Step 6, say yes, we've enabled them. And note that on step 4, I also added a note at the end that says deposits, notifying the rafters that they're going to be paying a deposit of $150, which you would also email and tell them to, of course. Back to the deposits. Now it's enabled, and we can now type in deposits from our rafters. So let's simulate one for Jane. And we'll put the 150 in, and that she sent it on April, like we asked for, April 3rd, like we asked for. Okay, I'm going to pause the video at this point to enter all the rest of the deposits so we don't waste too much time. So as you can see, all the deposits are now entered, recorded, and we see that each rafter now has $150 to their deposit credit. We see we have about $3,150 to spend. Let's spend it. So let's add an expense. And let's say $500 for permits. I'm just going to copy the rest in for time. And so now we see we've spent all but $80. We're going to go look at the effect on the expense sheet. So now we see on the expense sheet that deposit totals are shown because we've enabled our deposits. And we see that the outlays have increased. We see now we went from $610 to $760 for bill. So including both what they spent individually and what they contributed to the deposits. And we see that the average expense per rafter went up because we spent a bunch more of everybody's money, and everybody now has been adjusted. We also look down here at the bottom and we notice that we show all the expenses that came in from the deposits here also. And so our expenses went up from $5,000 to $8,000, a little over $8,000. So let's move on to the next topic, which is expense subpools. There are situations where only some rafters participate in certain expenses, say alcohol or an add-on day trip or day outing. But because segregating expenses into different pools can be such a headache, usually these costs are excluded from group expenses, and that can work pretty well. However, the planner can handle subpools automatically with no additional overhead. So it is a good choice when the expenses we're talking about or coordination efforts are large enough. The example we're going to use here for our expense subtools is the alcohol expense, which is a common candidate, especially when children are on the trip. So we're going to start in the setup tab, and here we notice that alcohol is marked for all rafters right now. It's shared by everybody. We're going to put it into a subpool. We also added a note in the group expense policy here about subpools that alcohol has been added as a subpool. And we're going to go to the rafters tab now and identify those who are going to participate. So just for speed purposes, I'm just copying them in. So what we did was we selected 16, as we deselected all the children. So all these children who are having expenses paid by these are all children with their parents paying for them. And we're also going to pick Tom Jones as somebody who's a teetotaler. So these guys are all children. Okay, and so the effect then, when we move back to the expense summary, where we're going to spend a good deal of time here now to talk about the effects, is you'll notice that the alcohol category now is highlighted as a subpool. And you'll notice something else. We had $388 up here. Now it's $316. So where did some of those expenses go? Well, if you follow this little prompt here, it says to scroll down to look at totals and distributions of subpools. So we'll notice now that we have a subtool total here, and it's being subtracted from the expense total. So we have still 8,000, the same number of expenses, but now some of it's being treated as subtotal, and it's being subtracted out of the all rafters total. So now we have a subpool called all rafters, which is everything but the subpools. And we see up here that our all rafters average expense is now $317 instead of $388. And we notice also that this was the head count for this pool was all rafters, and this one was the 16 people who are drinking. So if we look down here, we can see how that's done and what the effect is. So this changes the share of expenses for all the rafters. So the people who aren't drinking, like Artie, who's a kid, Artie is not sharing the alcohol pool, but he is in the all rafters, and so his share of expenses goes back down from 388 down to 316. Now we see Bill, and he is drinking alcohol, and so his is $93.50 more than Artie's, and you'll see this pattern down here, and it's reflected up here in the share of expenses. So most of these guys are at 410, and the people who aren't drinking are at 316. The same set of calculations are being done. We didn't have to touch any of the expense registers, the deposits. None of the transactions have to change here. We're just changing how the money is grouped, and we're changing how we calculate. So now we move forward in time, and the raft trip is over. The expenses have all been entered, and the CFO goes to the setup tab now, and he declares the expenses closed. So we'll close them. And then the CFO will go to the reimbursement tab, and he can, so you can see that all the reimbursement or all the money that is owed by payers has been moved over here, copied from the expenses tab. And then we have those who are owed money, and it's listed up here. We can press the CFO can press the automatic assignment button, and the assignments will automatically be done. So here we see that nobody is owed any money. I'm going to go back for a second. Nobody is owed any money anymore. Owed because we made assignments for the payers to pay the payees. And we automatically at the same time produced an email that we can let all of the rafters know that who owes money to whom, and contact information so they can talk to each other and pay each other back. So I'm just going to use, you can pause the video and take a look at this all you want, but I'm going to go and just take one example. So let's look at Bill. So we know Bill was a drinker, and he's owed money. So it says that Bill, and it tells us how to contact him. His share of the group expenses was $410, and it details it out. He had to pay the average expense, and he had to pay the expense for the subpool for alcohol. It tells us how much he spent, tells us how much he deposited, tells us the total outlay, and it tells us that it exceeded Bill's share of the expenses, and so he is owed this amount of money, and then it details who's going to pay him back and gives contact information. So in conclusion, the simplicity and low overhead of the Raft Trip Planner's deposits and expense subpools makes them more readily available and useful for your raft trip. There's additional information and multiple links in this video's description below. There's a link which allows you to make your own copy of the Raft Trip Planner template so you can build a planning spreadsheet for your own raft trip. There's a link that allows you to make your own copy of example 2 of the Raft Trip Planner, which is the sheet used in this video, so you can try it out with sample data. The video for part 1 of this topic, the Raft Trip Planner spreadsheet, introduction, describes all of the other features besides the expense management covered in this one. So if you haven't seen it, there's a link that can be found in the video description for that video. And there's also a link that will allow you to create a copy of the example spreadsheet that it was based on. So that's my conclusion. And so comments are most welcome, especially if you have questions or issues with the spreadsheet. Don't forget to like this video if you found it useful, and happy rafting.